Okay, guys, so I've been gone for a while. Yeah, I've been kind of like busy for a while also. So, yeah, I saw most of your comments, based on the video not having like my voice not loud, and yeah, sometimes there are noises, yeah, I understand. So, today I'm gonna be talking about something important like doing analysis. Um, like the analysis let's How do you start your analysis as a smart money trader? Well, normally it depends on the type of trader that you are, and for me I would say that trading, I do analysis. If I want to swing my trade, I do analysis from my daily chart. Okay, so looking at eurusd right now, I'm thinking I was expecting to be selling rather than buying. Okay, I was expecting to selling rather than buying. So right here we can see the market has been bearish for a while. You can see where I mark the growing dots is the higher highs and here low, and you see this one mitigating an area of what? An area of supply right there, right? So we can see the structure forming there, higher highs and higher lows, higher highs, sorry, lower highs and lower low. So right here we see how the market traded back up, right? Has it traded back up? What did it go for? It went for the imbalance. It went to balance this sell side imbalance that is here, which could also be a mitigation block on the lower time frame. And you see it went straight into that. And what are we seeing the market trying to do? It's trying to go to do what? Create another lower low, right? Because you can see the structure right here that we've been on the one-sided market and we've been bearish. So yeah, that is it. You can see that on one side of the market, and we can see how it started. We're breaking this low that was here, right? Breaking this low that was here. So we're expecting to see where it create another lower low. If it's possible, if it failed to create a lower low and trades higher to break this high that was here, I would say okay, it is now done what? Change character. It broke this high. So if I'm seeing a pullback, I'm expecting to do what? To be buying areas, but for now it's bearish, so I'm maintaining the bearish market. So on the 4 hour, we can see that by looking at this, right? We've been really bearish right from here, right? You can see our higher highs and higher lows. See here, and we see the area of supply right there. We have a drop base drop, right? We have a drop base drop. So from the daily chart, now run down to the 4 hour chart. You can see the bearish market. Although we can see that there's also an area of supply right here that is not yet mitigated, right? That's not yet mitigated. But what did the price do? It ran for what? A fair value gap right there. Alright, so it used this set stop here. It used it as what? The resistance. So it ran through that area, and what did it do? It rejects at the area and sold off. So why is it drawn to? It is drawn to what? Set stop resting on this low. Alright, so that is it. Now, things you were looking for, first thing you should know that market structure is like number one key, right? So let's just say these are the things you're looking at when you're trading. So let's just say we are being a bullish structure. Uh, let's say we are being on a bullish structure. We are having higher highs and higher lows, higher highs and higher lows. So number one thing you should be expecting to see is you could like see it break this low, it changed character, and what we see, it retraces back to this area, and then what happened, we see it comes back down, right? So these are the things we were expecting to see in a bullish structure. But before it broke that low, we were what are we expecting to see uh, at that area of this sell side, sorry, this buy story graph, it will leave behind an area of supply right there. So let's just say that um, so let's just say that we see it rally up, down, higher, high, higher, low, higher, high, higher, low, higher, high, right? And then we have it sell down a little, and we see it create an area of supply, a little consolidation, a base. Then we see it sell down a little, taking that high, and when we see it retraces back, sometimes we see it create what liquidity that it needs to grab. It needs to grab liquidity and do what, rally up. Once it grabs that liquidity, it does what, tapping into the area supply, and we see it continue selling down. So these are the things we were expecting to see on a bullish market to say the market has changed direction when you see them on a higher time frame. So we see that we have what, the cost model right there, and we have what, trade top, all right, a fake out zone, like a liquidity generated around that area of institutional pricing. So it have to do what, it needs to grab that liquidity, use that liquidity it I grabbed to activate their orders. These are things you need to see on a smart money trading, smart money concept, right? You trade in a smart way, and also you have to see what an engulfed candle, a sell side imbalance here, telling you that yeah, it needs to go back to do what, to clear the imbalance here, and then continue the downtrend. So if you don't want to trade, if you have this, you enter here, you could also, you know, have um, a pullback that does what, comes back here and then do what, continue selling. All right, so there is one thing you see, you have to understand on smart money concept. You should also know that for an area of order block to be valid, it needs to grab liquidity to activate their orders. Just like we are seeing here, we know that we're having higher than highs. Every highs we have what, buy stops resting on every high, and every low we have sell stop resting on every low. So if the buy stops is the only one that needs to be grabbed, sell stop will be held, sell stop will be do what, be protected until it decided to change trend. Now you'll be looking at the major structure. On the lower time frame, you will see lots of minor structure inside this major structure. So you might think that that little break it did on lower time frame, you might think it's a break of structure, but you do know it's just to grab liquidity on lower time frame and continue bullish. Only you see it take out the major low on higher time frame, you will possibly say, yeah, that's change direction to do what, to go bearish. So this is basic thing you will see about uh, structure. So another one is you have higher highs, higher low, um, higher low, and then you see um, a failed high. You see a failed high, right? It failed to create a new high, and once it does that, it did what? It creates an area of supply and then breaks structure. Okay, after it breaks structure, you're expecting to see a pullback. Okay, you start to see a pullback, taps into area supply, and then what, continue, change direction to be what, bearish. Now what is happening here, what we are seeing here is what is known as what, a shift in market structure. Okay, a shift in market structure. So after the shift in market structure, what are we seeing? We have a break of market structure right there. We have a break of market structure right here. So this area we are seeing here is what is our area of supply. All right, our area of supply. It leaves behind another block. So this is number two thing you need to focus while trading. You have a bullish structure, and then you see what you see a failed high. You know, we're having higher highs and higher low, higher highs and higher low. It failed to create a new high. Now, before we're gonna be expecting to buy at this area right here, you'll be seeing it to take out buy stops, and when it's pulled back, it's formed liquidity, tap into our area and continue the bullish structure. But at this point, instead of it to create a new high, it did not create that high. Instead, it failed to create the high, create an area of supply, and breaks the market structure. If there's any demand here, it breaks through that demand. So we are saying other block taking an opposing other block, taking out an opposing other block. So what we're expecting, we have to see the price retraces back to that area of supply, the broke structure, since we are having a failed high and there's change direction to do what? To be bearish. So we see it tap into our area of supply and then continue the bearish structure. Alright. So this is for a bullish fund. Now I've seen most traders have mistaken this shift market structure, like they are seeing this here, this here, this here, and then um they see this here, and then they see this, something like this. Yeah, this is not a shift in market structure. All right, this is not a shift in market structure, and yeah, you're having an area of supply here. Okay, but if the price is here, you're not expecting to sell at this area right now. This is not a shift market structure. This is the continuation of a trend of a bearish structure. Now you're only expected to sell here if you see it do well, take out a low, a major low, a higher time frame low, sell stops. So if it is going to pull back, it has to pull back, and then you can possibly be selling at this area. But if we see this kind of stuff happen, we see it fails to take out that low, you're not expecting to sell yet, because you could possibly see what happened. You can possibly see um, something like this. Okay, so after we something like this, we like see it pull back, and then continue bullish. Okay, so what happened here? This is now where we have that shift in market structure right here. So there will be area of supply here, there will be imbalance here, and then we have it taking out opposing other block, breaking structure, change character, break market structure. So these are two confirmations. And also when I'm trading, I would have to see it break two structures. Like we are having lower lows and lower high, lower lows and lower high. If I see only one break like this, I'm not confirming to buy at this area. Okay, I'm not confident to buy this area because there could possibly an area of supply at this side for it to do what? Continue selling down. So I'm not expecting to buy here. Alright. So if I'm expecting to buy here, I'm going to see one break of structure. I will like say that is a change of character. If I see break this high also, I will say alright, that's a break of market structure. What am I going to expect? I'm expecting to see a pullback and then I'm buying the sell, or I could possibly see it do what? Respect area of demand here, break this, and now do a break of structure out. Like, yeah, I've confirmed it has changed direction, so I'll be expecting to sell to buy at this area and then continue the change of structure, the change of trend right there. Now if I do not see something like this, if I do not see the change of character here and the break of market structure, maybe a low is too far from the other low, right? So I see a change of character, I am not buying at this area right here. I might expect to see something like this, see it create an inducement, and then do a what? A break of structure. Remember, if this low is pretty far from it. So after I see these are the two things, change of character. I've seen change of character, but there's no area where it could perform a break of market structure. I'm expecting to see a break of structure after it has taken change character, sell down a little, now break structure. And what am I expecting to do? What I'm not expecting to say, yeah, I could buy from this area right here, and my take profit be an area of supply right there. So These are the things I would expect to see, or I could be seeing a quasi model, a QML at an area of supply, right? So um, I see it do what? Create fake out zone, area of support, and then tap my area, and then we go bullish right there. Okay, so these are the things we these are the things I'm looking at in the structure. And another setup is we have higher highs, higher low. Then we have a stop hunt. We're having a week, a week, just grab liquidity and trace back into that area. Okay, and then what we're expecting, we see a break of market structure. Now we are now having what? Stop hunt plus break of market structure plus what? Return to order block, RTO. So the bearish structure continues. Now, for a continuation of a downtrend, this is where you're going to apply your course model right here. Like we're having higher highs and higher lows, higher highs and higher lows. Am I correct? Lower lows and lower high, lower lows and lower high. Then we have something like this. We have something like this. We have a break of market structure, and I would say chain of break over. So we call it chain of character, then break of structure. Now this is where you'll be applying your QML. Okay, so this is where you'll be applying your QML. Remember, you're going to have an area of supply right there. Okay, you're going to have an area of supply right there. So this is where I'll be applying a QML for what? For the continuation of a downtrend. All right, because we haven't what we think that it has changed direction right here. Like we have high, lower high. We fail to clear it, a low, a lower low. We have a higher high. But after the high high, what not happen? We now have low, a lower low. So we are saying, okay, this is not a bullish structure. It has not yet changed bullish, right? So since we're having higher low, higher high, lower low, the pullback right there is the QML area right there. So this area, QML in line with your order block. You cannot see something like this and you'll be like, I'm trading QML. No, your QML will be in line with your area of supply or an area of demand. Okay, this is what we know as the maximum MPL. Okay, so your custom model should be in line with your order block or area of supply, whatever you choose to call it. So we're not saying, yeah, this is the continuation of the bullish and the bearish structure. Now for the bullish structure, continuation of the bullish structure, we are having higher highs, higher lows, higher high, higher lows, um, higher high. We now have lower low, like you say it broke this low right here. So we have this here, right? And then we now have a pullback right there. So yeah, so this is the continuation of the bullish structure. Okay, we're now having our quasi model right there, our KML right there. So we continue the bullish structure right there. It's just like the same thing we have here on the bearish structure. So it's the same thing we'll be seeing on continuation of a bullish trend. Also, yeah. So looking at the chart right here, looking at the chart, we can see this is a 4-hour chart, right? So if we were to label this, we know that this is our higher high, right? And then I have this as my higher low because we have it like this on the daily chart. You see, we will probably see it that way. Okay, on the daily chart, you will see it that way. This is the daily structure. Okay, so on the 4-hour, you get to see some minor structures on the 4-hour. So you can see You can see it on the daily chart. It's very clear on your daily chart. Like we can see it's been uh, bullish from here. We're having higher highs and higher lows, right? We're having higher highs and higher lows. We are pretty bullish from this structure, right? So what are we having right here? For me, I would say this year is my QML. Okay, I'll say this year is my QML. All right, because on the 4-hour structure, on the internal structure, you can see higher highs here, and then you can see higher highs, higher lows. Then we have also another higher low, and then we have the maximum pointy high right here, the maximum pointy high. So if you also watched my previous video, I mentioned about the candle pattern called king. You understand, wicks crossing each other. Okay, so that is what we call the king pattern. So right here we can see the structure right here. So can we run over to the 4-hour and we have a clean view on that. Okay. We have a clean view on that. Yeah, so this is it, right? This is it. Okay, you can absolutely see that we have an area of what, an area of supply right here, right? You can see we have an area of supply right here. So what are we seeing right now? Okay, I would say this here is also right here, right? Because we have higher low, failed high, right? Now this failed high right here also failed to do what? Break structure, right? It failed to break structure. You can see that right here, right? Higher highs, higher low, right? But what happened? We are expecting this high to be broken for us to buy an area, but you can see it's pointy. It's wiki. You won't possibly. I know most people might kind of find an area at this week. But yeah, this is higher structure, so we can see it failed to break this high, right? So we're expecting to see it what, like it failed to break that high, right? So let's just trade the setup I just showed now. We're having a what, a shoot on market structure, right? We're having an SMS, and we can see clearly that this is an area of supply, right? But we are not selling from here unless we see what, we have seen a change in market structure. Now we'll wait for the second powerful setup to happen after a change of market structure, and which is what, a break of market structure. If we see a break of market structure like this, now I would say I'm seeing an area of supply here. I'm expecting to see a break of market structure. After I see a break of market structure, I will have to do what, sell at this area. Okay, and expecting to sell at that area. But what happened? Price did not take out this low, right? It traded back up, do what, convince you that this is an area of supply, it has to sell. But after that little consideration, what happened? It takes you out, right? So we're now having what? This new high created here, and we're having an area of supply right here. And it was that area of supply that does what? Took out this low that was here. You would also say this is another structure, right? So you say we're having significant support resistance. We can see it tested multiple times here. We can see it losing the area, using this area support, resistance, support. So we're having the maximum pain level here, and what you see right now, straight into there. So we have what, like I say, we have it. We get to have to see grab liquidity. So right here you can see that we have a faker zone right here. So what did the price do? It did a stop hunt, right? It grabbed the liquidity, tap into that area, it used that liquidity grab and does what? Tap into our area of supply and sold off. Still here we also have what? Another liquidity. Like I say, it has to grab liquidity. It has to grab liquidity. We have another faker zone right here, right? Equals, right? So most researchers will be like, all right, this is a double top. I'm gonna sell, and yeah, it will respect you. It sells up, but what happened? It does what? Take you what? After manipulating, it takes you what, and then continues selling down. So now we can see that this here has changed its structure, right? It has changed its structure. So we're having our pointy low right here, right? Because there is the daily chart. There is our pointy low. So what now happen? What now happen? You can see trade into our course module right there, right? Into our course module. It's just a snapper entry using a course module right there. Yeah, course module right here. So, oh, sorry about that. So you can see the price also deceived us right here, right? Because if we are going to have a confirmation entry, has it tapped into this area of supply right here, it needs to leave another area where the price will have to pull back to continue bearish structure. But what happened? Since this is a big order block, right? It will be at 50%, and price needs to do what? Go straight to tap what? Our QML, right? It needs to go straight to tap our custom module, right? So 1 hour, let's see how the candlestick might look like. Oh, 1 hour. So where is it? All right, this is it, right? No. All right, yeah, we have it. So this is what we have it right here, our QML. So we're gonna refine it on 1 hour. You have a supply right here. Let's see. Oh, we're trying to see something clean. Having 2 hour, 2 hour chart, 2 hour time frame. Two-hour time frame, 2 hour time frame, 2 hour time frame. All right. Yeah, there is an area of supply right there. So it is now refined on 2 hour, and we have our king right there. We have our king right there. And what do we have? Significant support and resistance. We have significant support and resistance. We have support. We have also, oh, sorry about that. We have also support right there. So we are looking at what? MPL. We are looking at MPL. This is where retail traders suffer maximum pain level. You understand? So they'll be like resistance turns support. Let's buy. The price came back down. Consolidate. Support. Takes them out, and then what? We have an imbalanced candle. We see it breaks structure right there. So we have in our area of resistance. So this week's here is just to grab liquidity, right? Is a fake out zone also because we have resistance right there, right? We have resistance right there, equals, right? We are having equals right there. You can see there at the body of the candle, we have equals. So it just wick through, Yeah, probably it convinced us right here, but it has what? An inducement. It did not tap our QML, and in line with QML, it did not tap our area of supply, right? So we have refined our entry right here to our. So I want to look at the 3 hour also, so I could see. Let's see if I could see something right here. Yeah. So yeah, this is what I was saying. Significant support resistance, we have resistance right here, and yes, also QML right here. KML right here. So the KML is really used for confirmation, not just an entry point, but a confirmation if we are seeing an area of supply or an area of demand at our KML. And you should know it was that area that does what? Took out low. So it changed character right there. So we see what happened. Price did what? Create liquidity that it needs to grab and tap into our POI. So we see that happen, right? There's a clean sniper entry, and you can absolutely swing that trade, right? You can have it just tap into our course model right there. The clean one is a sniper entry, and this is what I was saying, right? This is what I was talking about. If it tap into our area of supply, it needs to do what? It needs to pull back for what? Another for a confirmation entry, to give a confirmation entry. So now what are we seeing here? We have that breaker structure right there for our confirmation entry. We have that breaker structure. You can see it did that with a full body. And what do we see also? We see also a stamp hunt, liquidity grabbed, right? Also is a custom model. All right. So we see a liquidity grab. Now we have seen that we have liquidity grab. We see it has left behind an institutional candle right there. And what did it do? It break the market structure. So another confirmation trade entry. So if you have a snap entry, this just to confirm a trade. Now the best advice I can give you is do not. Sometimes you don't need to have a snap entry. Trust me, because most times area of POI might fail. So for you to confirm your POI we hold, you have to wait for your confirmation entry. Please, 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 always do this. A tap here, a sell. Yeah, you miss a sell, but you should calm down. Yeah, you should calm down because the institution we have to pull back to mitigate their orders. Okay, so they sold to take out this high break structure, stop hunt plus break of market structure plus return to other block. So what the price do? It trades back to our area of supply. Sorry, I wanted to change, like, I want to change the color. All right, so we have that area there. Let's see if we can find. Yeah, let's see if we can find. So um yeah, not loading first. So yeah, this is what we have on our 1 hour chat. On our 1 hour chat. On our chat. So this here is clean, very clean on our 1 hour. We have that supply right there. And what do we have again? Significant support and what? Resistance. Sorry. Significant support and resistance. And our KML right there. Okay. So you can see these equals right here. These equals we have right here. So let's see. Did it give us a fake out zone? Did it give us liquidity need to grab? Yes, it did give us that. What do we have? We have here fake out zone. Okay, we probably did have a fake out zone here. So we have resistance right there, and we can see semiconductor support resistance. You can see that tap here, tap here also has what? Support. Tap here also has support. So you can also see that we have most traders, yeah, trust me, most traders use white covers as confirmation. So we have PSY right there, we have our BC right there, we have our ST right there, we have our ST right there. Trust me, white cover is very good. You can use it to confirm if you know if the also if the institution needs to tap in the area of supply demand. If it's an area of supply, it does what? It creates a distribution phase. If it is area of demand that it needs to tap, what does it do? it creates a um accumulation phase of supply. So also we can see we have a fair value gap right there also. But yeah, this whole bullish candle is our order block right there. So we have SC right there, right? Is it ST or ST? Who knows? I don't know. Um, but yeah, looking at that, you can see that it approached our POI with what? A white curve distribution phase. Okay, so the distribution phase is just to manipulate the price, so they could grab enough liquidity to mitigate an area of supply or an area of demand. So we have BCST, right? So right here, this one will be buying climax, buying climax by the left. So we have buying climax, right? We have ST secondary test. Um, we have our AR right here, right? You just use this here. We have AR, right? We have automatic rally to the downside. We have AR, we have ST secondary test, and we have little minor sign of weakness. And the minor sign of weakness is that what happened is created equals in line with buying climate with our automatic rally. So we have minor sign of weakness right here. We have minor sign of weakness, and what now happened? What happened to our area of supply? Our area of supply is our UT, which did what? A stop hunt, right? They also is like a stop hunt, like it grabbed this right stops resting here. So we have our UT tap into our point of interest of uptrust, right? And most times you won't see uptrust after distribution. Okay, so now what happened? We see our uptrust, right? So we have a shift to market structure right there. You can see that right here, but not this is not yet confirmed, right? You can see higher high, higher low. It failed to create a high, so I would say this is a fail low. Also, sorry, it fell high. So my fell high, I call it what? My expectational order flow, my EOF. So order flow, why? Because it failed to create a high, shift market structure, right? The area of supply right here, a fair value gap. Now I'm not confirming this yet until I see the what break this low, right? So now I see it broke this low. So you will say it's a change of character, right? In brain character BMS, I'll also write it a change of character right there. Change of character right there. Okay. Now another confirmation, a clean one, is that it broke a major low. This is where you confirm your white curve phase, right? It broke our minor sign of weakness, right? So our minor sign of weakness it broke. What happened? What happened? We have a major sign of weakness. All right, a major sign of weakness right there. So what we're now expecting, we have liquidity. Now having what? Our tests. Okay, right there. Test on UT in line with QML, shift to market structure, and break of market structure with an area of supply ref there, and significant support resistance maximum pain level. So we see the price. You can see that we test, tap in, and what? Sold off. Okay, you see that? So yeah, we have equals here. So let's go back to a higher time frame. Daily chart. All right, this Euro USD. This is Euro USD, and we see that clean massive sell, right? That clean massive sell, and we see create, take out a low, and continue selling. Why selling? There was no interest for it to come back, right? It does not give any intention to be bullish. So this is where the whole selling started. the wholesaling started, and you can see that selling. So we also have, if we see that it did not even return here. Yeah, we can see that clearly because we have sales starting balance right here. So it did not return clearly. So what you should focus on right now is what you're seeing presently right here. Okay, what you're seeing presently right here. So let's look at the monthly chart. So on the monthly chart, we can see clearly that the monthly chart we have backside imbalance right here, right? So traders that trade fair value gaps, I don't trade fair value gaps to be honest with you. I don't trade fair value gaps. I would say that I don't know how to. I might say that because I see every fair value gap has an imbalance that the price needs to fill up. Okay, the only time I'll be trading fair value gap is if I see things like this I just drew here. Okay, if there's no other block, you get to see a fair value gap, a clean fair value gap. So we see the price trades down, consolidate at that area, cleared this imbalance that's here. So we now have another imbalance below here. He also needs to clear. All right, so we are seeing this eurusd still gonna sell down to do what? Grab liquidity. I don't know if there's anything right here because there's no other data below. So we are seeing 2003 right here. So that is this my money concept trading. Trade with your market structure, follow the trend, look for starting setup. All right, the QML, other block, supply demand, shift the market structure, stop hunt plus breaking market structure plus return to other block. All right, so something like this you're seeing here is something you should avoid. Okay, this is manipulation. This is not a clean chart. All right, avoid trading something inside this area. Yeah, I don't mind if you trade it though. So that is it. So we see it right here. There is another block right here. You can clearly see that there is an area of demand because we have imbalance right here. The price traced down, tapped into it, and went bullish. All right, but it failed to do what? To take out this high. It failed to take out this high. So it has changed direction to be what? Bearish, and also it was an area of supply it tapped into right there. So you can see the market was bearish from here, right? You can see the market bearish from here. We have it here. We have it here. Okay. So we're having structures right here on the weekly chart. So imbalance needs to clean, balancing everything. The algorithm runs for what? It runs for liquidity, and it runs to grab liquidity, and it runs to do what? Clear imbalances. It generates liquidity, it runs liquidity so that there will be money in the market it needs to grab. Okay, so that there will be enough liquidity. If there's no liquidity, the algorithm, the price won't be, it's nothing. All right. So the algorithm needs to generate liquidity, right? Also here you can see there's a consolidating market, right? So it needs to form liquidity. It needs to form liquidity. Without liquidity, the market is nothing. All right. So it applies everywhere, both on synthetic indices, currency pairs. Well, the difference between synthetic and currency pairs is just that um, the currency pairs deals with real market. You understand? It deals with real market, and you deal with session trading days also, and you deal with the bank. The bank um driving price. You understand? The banks, you deal with the bank. They are the one that prints price, so they're the one that generates price. All right. So looking at gold. Yeah. So we can see from this region that gold change I would say you create liquidity, right? Say you create equals, and also we see it did not take out this high. All right, so this buy stop right here will be held. Okay, this buy stop right here will be held. So it's a failed what? It's a failed high. It's a failed high. So gold is gonna sell down as hard as it's gonna sell to the what? It grab liquidity resting below here. And we have imbalance below also. I'm not trying to say it's gonna say, but looking at this, I know that it has changed direction, right? So you kind of like predict the price. You're seeing what the market is doing, so you have to follow what it has to do. We can also see we have equals resting here, right? Everybody can see that we're having support, and you know what happens when that happens, right? Expansion and consolidation, right? This is a consolidation, so we'll be having the same expression. So whenever gold might try to trade back up, we see trade back, we're going to see it trade back up to this area. All right, because we're now having change of structure. We're having higher highs and higher lows. All right, we're having higher high. You can see fell high, so we have that shift, right? Trades back up, down. So we're expecting this low to be broken. After that low is gonna be broken, we're gonna have a pullback also. So we're having a change of structure right here. All right, so on the daily chart, let's see. I'm gonna look on the daily chart. Let's see what we have to see on the daily chart. All right, so this is what we got on our daily chart. So you can see the structure right there. All right, you see the structure, price trade back in, clear the imbalance right there. Although we didn't see trade to the supply, right? So it just did that. High, 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 low, high, high, created a low, trade back to clear this imbalance, and in the 4 hour is an area of supply that we have there. We have an area of supply right here. You can see that the clean entry price needs to clear to balance the price, and why is doing that? It needs to consolidate. You can see that. So it's not leaving behind an imbalance. How I is doing that. So what is this? It taps there sniper entry area of supply right there and sold off, right? It sold off. So the imbalance is left behind. I could probably come back to that very soon. Yeah, but we don't know when. We don't know. Yes, it might take. Just like it's selling down right now to clear the imbalance on the buy side, right? So you see it tapped into that area. Also, yeah, you can see a like of here. Hmm. So we see it selling with less momentum. So any buying from here, I don't know. This support, it has to grab that sell stuff. All right. I think it has to grab that sell stuff resting there. The way it just write it down is losing momentum right here. It's losing momentum right there. So whenever it's gonna try to trade back up, I'll be looking at this area of supply here. So what do we have in that area of supply? We have SMS, another block left behind. Then we have what? Our KFL right there, which is what? A stop hunt. Right, which is a stop hunt, and then we have a break market structure right there. All right, break market structure. We have sell side imbalance. We have an area of supply right here. So yeah, that's it, guys. So we have imbalance, sell side imbalance. It needs to clear. So I think when it comes to this area, it has to what consolidate a little bit around that area, and then continue selling down. We have imbalance, right? It needs to clear too. My think it's the area of demand, but it is fake. So we have sell stops because the price trades back in there, and then continued. So sell stop needs to take that out. So yeah, remember, I know I trade a lower time frame, but I'm not going to talk about that right now. I have to trade a lower time frame. I'll be looking for sales rather than buys. So yeah, that is it. right here. So let's see if we could like look at synthetic. All right, so guys, that is how you trade. Okay, trading is just like a puzzle. You have to crack the codes. You have to, you know, think, always think, analyze, calculate. You understand? So these are the things you need to do. Don't let social media confuse you. Trying to say, yeah, I got this trade, I got this trade, I made $1,000, I made $10,000. It doesn't matter. Stick to your own plan. All right, trade your trading plan. You know your daily targets. You know your risk reward. All right. So just look at that on euros and gold. If on social media we can even see people buying, you can see people selling. And it's a probability, all right? In a one single candlestick, in a forward candlestick, you can see set up here to trade, buy or sell, and you'll see me done that. All right, I do that on 1 minute time frame. If I see a single forward candle and I know where the price is trying to reach to, I can find an entry on 1 minute or 1 minute to continue that trade to that area. So yeah, that is it. All right, so we're looking at synthetic right here. We're seeing on VIX 10. We're looking on VIX 10. So minimize this over 5 minutes time frame. Yeah, 5 minutes time frame, right? This area, even within nothing here, okay, we have support, right? We have resistance right there. The range markets also. So now looking at the daily chart, what do we have to say about daily chart? All right, I'm taking this off. You can see the price change its form right here, right? So it was consolidating. Why consolidating? Is selling downwards, right? So why selling downwards? You can see I will only be looking to sell right here, like looking only for sell entries because we can see it did a stop hunt and the final growth is low. Okay, it did a stop hunt, took out this low that was here, trace back up, continue selling down, consolidating. All right, so most times is though you possibly find it an entry here, there's always an entry. All right, there's always an entry. So seeing this now, the price, you can see these are things I did on the lower time frame. So looking at this now, we can see that price is selling to do what? To do what? Imbalance right here, imbalance right here, imbalance right here too. Okay, so it might be a long sell, alright, because we also have the cost model right here. Also have QML right here. We also have the QML right here. So probably the price, we know how long it's gonna take to sell down to that area. So you will probably be looking for sell entries, right? You have lower low, lower high, lower low, lower high, lower low, and in the minor structure we have lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. There's no yet a lower low created, and you see a price consolidating right there, right? So we also have this imbalance right here, and in that imbalance we have our cost model right there. We have a cost model right there. So you won't know how it's gonna take to pull back up to get that area selling because there's no demand it could use to push back up. So right now we know it that is drawn to liquidity to take out this low here. Okay, so there's no need for you to trade right now. You're just waiting to see what happens and you wait for a confirmation. So 5 minutes, 5 minutes. So you can see the price consolidating, right? Most traders will be like, we have like a custom model right here, right? Because we see it take out this low, right? And you see the stop hunt on this high right here too, and also attempt to take that low. So yeah, just the same process. So I think I'm running out of time. So this is not what I'm gonna be trading, right? Although I know we're going to take out this low, it's good trade down to hunt for this low. So yeah, maybe next time we might continue. Yeah, trying to keep the video short. All right. So you know what we have explained here on currency pairs. So yeah, that is just the process. That is just the process. So I'm gonna show you guys one more thing. GBP USD, GBP USD, GBP USD on there. So the same process. GBP USD. Yeah. So we know sell stop. It needs to be grabbed. So I don't know why price is gonna trade back up right here. But I do know it's after a stop hunt. So I would like see like it creates a minor structure here, then do a stop hunt grabbing that low and this low. Myself or white, then if I see a break of market structure and area of supply imbalance, area of demand and imbalance created, I will buy up to this area, then sell. So yeah, yeah. So I don't know when that's gonna upload in on the video, but yeah, till next time. So I hope this video helps because I know most of you asked a question about that. So yeah, okay. So I'll be going now.